committee, are there any changes that anyone has for today's agenda? All right, seeing none then, I'll just take a motion to approve the agenda.
So moved.
Is there a second? Second. Moved and seconded, any further discussion? Seeing none, all those in favor say aye.
Aye.
And those opposed, no. That passes unanimously, so thank you for that. We'll now move on to approval of the January 24th Draft Management Committee minutes. Again, everyone's had a chance to look those over. Any changes, thoughts, questions, edits? All right, seeing none then, I'd entertain a motion to approve those draft minutes of January 24th.
So moved.
Moved by Pacheco, seconded by Barber. Any further discussion? Seeing none, all those in favor say aye.
Aye.
Those opposed, no. And that passes unanimously. Now we'll move on to our first non-consent business, report of standing committees. And we have before us the 2024-42 Minnesota Public Facilities Authority, PFA, loan agreement and general obligation wastewater revenue note. And we've got Mark Thompson, our Director of Treasury, here with us to walk us through this item. Thanks for being here, Mark.
Thank you, Madam Chair. Yes, Mark Thompson, the Treasury Director, and I'm here to present business item 2024-2, which requests council approval of a resolution 24-2, which will authorize the execution of a loan agreement with the Minnesota Public Facilities Authority as part of their Clean Water Revolving Fund, and also to issue a supporting general obligation note, which is required to secure the loan. The resolution also sets financial parameters around the loan, and I'll go over those in a minute. Those must be met before the loan can be executed. It's a program we've used for many years, and to finance a portion of environmental services capital projects over the next 12 months, and it's an advantageous program for the council because it carries a subsidized interest rate. So it's cheaper. It's a cheaper financing method than us issuing council bonds. So the previous loan we did last year is fully drawn as of February. So we're looking to close a new loan in early March for our next withdrawal. And Environmental Services has applied and been approved for a 20-year, $42 million loan this year that will finance a portion of their capital projects for approximately 12 months. So the parameters that I mentioned, the financial parameters state that the loan must close within 90 days of the council's approval. It cannot exceed the $42 million, and the interest rate cannot exceed 3%. The loan, we expect it to have a much lower interest rate, under 2% is what we're hearing. So we think that's a great rate. It'll save us about $5 million of future interest costs over issuing bonds. So they're paid back. This loan will be paid back with water system revenues. We don't levy for these notes. And demonstrates stewardship as a low-cost financing method that saves the council substantial interest costs. And with that, I'll stand for any questions.
Great. Are there any questions from committee members? Seeing none, you probably remember some of this from last year's presentation on it. Yeah, I really do appreciate this, and I know it says in here maximum interest rate up to 3%, which is still great, but if we can get below that, even better. And it's a great program to participate in. So, seeing no discussion, we have before us, get to my item here, the proposed action is that the Metropolitan Council approve the attached parameters resolution 2024-2, which authorizes the regional administrator or deputy regional administrator to execute a project loan agreement with the Minnesota Public Facilities Authority in substantially the form as attached, as the attached draft agreement, and authorizes the issuance and sale of supporting general obligation wastewater revenue note securing the loan in substantially the form as the draft note referenced in the resolution. So with that, I would entertain a motion.
So moved.
Is there a move by Lilligren? Is there a second? Seconded by Cedarburg. Any further discussion? Seeing none, all those in favor say aye.
Aye.
Those opposed, no. That passes unanimously. So thanks, Mark. Keep up the great work. We appreciate that. And you'll be staying at the table.
Yes.
For information, we get our investment review update quarterly. Again, I want to thank Councilmember Pacheco because you still chair this committee, correct? So that's awesome to have that liaison to this group. So anyway, the floor is yours.
Thank you, Madam Chair. This is, like you said, a quarterly update. It's a summary of what was shared with the Investment Review Committee yesterday, in fact. So this is for information on our portfolios through the end of the year, 23. So there's like 10 slides here, a couple on the economy, and then we'll talk about each of our 3 different portfolios. And I'm running it, looks like. Just a quick couple words about the economy and growth last year. The economy was surprisingly strong throughout the year, as the Fed has been raising rates for the last 18 months, or actually through mid-22 through July of 23. We're aggressively raising interest rates, and everybody, or a lot of experts, thought that would push us into a recession, which it hasn't. So you can see this slide shows the GDP growth of the last 6 quarters or so. You'll notice that the last 2 bars are the 3rd and 4th quarter of 23, and the growth was really, really good, really strong. Despite the inflation and despite the hikes, the economy hasn't slowed down yet. So that shows this on this graph. The readings were 3.3% growth in the 4th quarter after 4.9 in the 3rd. Really, the strength is coming from the consumer. So the consumer keeps spending money despite the high rates, which is kind of surprising. And there are still some concerns, and I'll touch on those in a moment. But like I said, the growth is really coming from the consumer, and can the consumer hold up as rates continue to be higher, and as prices are certainly high, even though inflation is coming down. But so that's kind of what the concerns are. The forecasts for economic growth in 24 are much lower. The economists are looking at 1.5 type numbers instead of these 2s, 3s, 4s that we've seen over the past 6 quarters. But so far so strong. I'll touch on inflation for a minute. This is a CPI, and you all are familiar with that. This is one of the common inflation measures. And this graph shows a number of years. You can see that we're way down from the peak in mid-2022, where it was over 9%. And this last quarter, it finished the year at 3.4, which is significantly down. It was relatively flat the last quarter. Certainly heading towards the Fed's goal of 2%, but not quite there yet. I also mentioned in this bullet that what's called the core PCE was 2.9% at the end of the year. That's the measurement. It's another measurement, but it's the one that the Fed really follows. It's slightly different than the CPI. Doesn't factor in housing as much, and it's really focused on goods and services that the consumers actually bought, where the CPI is more of a basket of general prices. But anyway, that's kind of technical. But
Mark, can I just ask, what does PCE stand for?
Personal consumption expenditures.
Okay,
so
thank you.
The Fed really follows that one much more than the CPI. But so that one's even lower than the CPI, which is interesting. So inflation is getting closer to their target, and except if you follow the news, you know that we got January's inflation on Monday, and that went up. So that was surprising the markets, and the markets took a little hit on Monday, but it was up to 3.1 for January. So we're not out of the woods yet on inflation. And I'll talk a little bit more about how the Fed looks at that. The labor markets, I know this is kind of busy with a number of different screens, but you can see in the upper right, the unemployment rate has been pretty steady around 3.7%, despite some of the large strikes and layoffs that we've had over the past quarter. The left chart shows the number of jobs added each month and a 3-month average. Job growth was kind of volatile, but not bad. And I think this chart doesn't show it, and since this slide was produced, that in January they revised up the December number from just over 200,000 jobs added to 333. So it was a huge jump in jobs for December, and then January came in over 353,000 jobs added in January. So job market's still strong. Hourly earnings came down a little bit over the course of the year and finished at 4.5%. Next slide quickly. This is Treasury yields. Gives you an idea how interest rates changed during the quarter. The brown line was the end of the third quarter. The green line's the end of the year. So you can see that interest rates dropped all the way across the curve. Our short-term portfolio is the very short end of this. Where the rates are nice and high still. The rest of the curve dropped. Our long-term portfolio is more in that 3 to 5 year area. So yields are significantly lower for that in that term. The expectation is rates will go lower again this year, especially if the Fed starts lowering rates, which is what's expected later this year. We're at the end of the Fed's tightening cycle, and the last time they raised rates was in July, so now the market's obviously wondering when they're going to start taking some of that tightening off and start decreasing interest rates. Certainly the lower inflation has opened the door for the Fed to start lowering rates. But on the other hand, the economy is so strong that you don't want to lower rates too soon either. So they're kind of in a good balanced position right now. And then with the high inflation we got this week, it's likely that they're going to be on a little bit of a pause for a while. The expectations before Monday's CPI was they might start cutting rates in May, and I think that's going to be pushed off into later this year. The problem they'll run into is an election period. They don't like to take too many actions right before an election, but they have meetings in June, July, and September. So we'll see where we're at then. I think they're going to, like I said, pause and watch more inflation data and jobs data until then. So that's kind of where we're at. I think I'll touch briefly on the equity market. We've got some exposure to that in our OPEB trust. 64% of our OPEB trust is in an S&P 500 pool. Great quarter for equities. Total return was 11.7% in the fourth quarter and 26% for the year. And we'll show you more numbers about how that affected our OPEB trust in a moment. But the stock market continues to do great. It was over 5,000 early in February, and as of today, it was 4,977. So strong performance out of equities. Here's our short-term portfolio. You see this slide each quarter. I think this is a portfolio we use to invest our short-term cash, and not a lot of change in this portfolio during the quarter. It's $1.3 billion invested, in Treasury bills, discount notes, and a money fund. And you can see the numbers there. We did allocate a little bit more to discount notes during the quarter, strictly because of yield advantage there. As I mentioned earlier, the short-term rates are really high now, but if the Fed starts to decrease those short-term rates, we may. We've been trying to extend a little bit in this portfolio and lock in those rates as long as we can. This portfolio really invests 1 year and shorter around our expected cash flows. On the right part of this chart, you can see the total return for the quarter was 1.35, so it beat its benchmark by a little bit. Good news is the average yield, you can see in the second bullet there, is 5.45, which has been increasing throughout the year. And we might be near a peak on that, but it's been a really good year for this portfolio compared to prior years. You can see the interest income in the last bullet was $17.6 million for the quarter. And just kind of give you a context, the interest income for this portfolio was about $55 million this year, and it was $15 million last year, so it's significantly higher due to these rates, which is great. Next, I'll touch on the long term. Couple things to talk about here. I think this is our longer term reserves. It's invested a little bit longer It's a little bit smaller, 473 million as of the end of the year. Invested in a variety of securities. I think the thing I wanted to point out is, if you remember back in the spring, we put the CD program on hold when there was a banking crisis happening. And at this committee last quarter, I talked about, and we've talked about it in our investment review committee, that it was time to get reinvested, and so we started doing that. We invested $9 million, and you can see that listed here, in December. And the program's approved for 20 to 25 million. Excuse me, we got $9 million invested by the end of the year, and January we have invested it up to 22 million. So we're in our goal range of 20 to 25 million. We're still discussing or in conversations with a couple more banks, so we may bump that up to our max of 25 in the near future. So we're looking to do that. That's good news. Good news. I think it's the first time we've really got into our goal range, which is great. Total return on this for the quarter is 2.6%, which was below its benchmark of 3.9. Its average yield is 1.73, which is a little jump up. We're starting to have some securities mature in this portfolio, and we can reinvest those at higher rates, which we're finally seeing some turnover. The interest income has jumped up a slight bit. Like I mentioned, we've got some securities sitting in this portfolio that we bought a number of years ago at very low rates, and we're kind of trying to get those turned over into higher yields as soon as we can. But then the OPEB trust, great quarter for the trust. You can see the total return was 8.4%. Total for the year was 17.95. You can also see there's some longer term averages of 10.9 for 5 years and 9.6 for 10 years. Really great quarter. The equity market, like I mentioned, is 64% of this, so it's really benefited from the strong quarter of the equity market. We do adjust that each quarter, or each month, I should say. We try to keep equity at 60% or less. So we're going to be doing that to bring that back down, but it's that equity exposure has certainly benefited us over the years tremendously. You can see that trust value is listed there too. In the fourth quarter, it went from 319 million to 331 approximately, and that also includes a $13 million withdrawal we did. So you can add that in there too. So it was a really good performance. Our liabilities are still fully funded. Our projected liabilities, we just have to keep in mind that those can change. So we monitor that monthly also, so we keep track of where we are in our funding. But it's a great situation for the council to be fully funded on this portfolio. And I think that's all the comments I have. I'm happy to answer any questions.
Great, thanks, Mark. Are there any questions, comments? Yeah. Great job.
Yeah.
It's really good to be tracking this and through, rocky waters there, but having your guidance and then the investment committee's work too, it's good. So message for everybody, the taxpayers and everybody who's a partner, stakeholder in the region. We've got the right people managing this, and we're in good shape, and we're seeing some good returns. So,
Well done.
Great, thank you.
Thank you for your hard work. We appreciate it. All right, we'll move on to our next information item, and it is our quarterly procurement and MCUB goals review. And I know Cy is here, Jody is here, and I don't see Ashanti, but we've got, sorry, I don't remember your name, but you'll introduce yourself. My apologies. So first of all, we have Jody and
Jody, Jacoby, Chief Procurement Officer, and
Megan Solberg, Manager of the Small Business Unit in OEO.
thank you, Megan, for being here. We appreciate it. So we'll turn it over to you for this update.
all right, good afternoon, Chair and committee members. I'm Jody Jacoby from Procurement, and again here with Megan, which is really exciting because our teams really are, Megan and our teams really work together collaboratively on the intentional intersections and engagement in a lot of these projects that you've seen quarter to quarter. So very excited to have Megan here. So we'll start by going through first the procurement report for fourth quarter, and then I'll transition to Megan to talk about the MCUB specific information to share. But first, the council's expenditure policy 14-2 for the procurement of goods and services authorized the regional administrator to approve awards not exceeding $500,000 for goods and services and for construction not exceeding $10 million. And you've seen the contracts above those values brought forward to the respective committees as a business item, and they're independently reviewed and approved. And the report before you today is grouped by value and procurement type. And it contains procurements that have a value greater than $175,000. And that's the value by state statute where we're required to publicly advertise. And we do so in a number of ways, but the most specific way is advertising on the council's doing business page. And so I'll start by first reviewing just the high-level overview as an outcome for fourth quarter 2023. And you'll see that, again, number of individual procurement events. There were 31,852 alone for 2023. Pretty similar, it usually varies a few thousand, but comparably so a little bit higher than 2022. And those events represent 96% of the transactions of the year. And then on the right side, the value for fourth quarter was just less than $204 million. And then for the year to date, almost $620 million. And the procurements by contract value are executed represent 91%. And again, those statistics quarter to quarter, year to year may vary a few percentage points, but typically they're pretty static. One thing that I want to point out is the first two rows on this page representing the dollar value of 0 to 10,000 and the 10,000 to 50,000. That's where we've really, again, in partnership with the Office of Equity and Equal Opportunity and the business units, have really spent a lot of time investing in communicating when there's an opportunity for an MCUB. And an MCUB, again, is our local program for underutilized businesses. And it's been really exciting to see that program grow. When we started in 2019, on average, the year spend was 3.5%. And in 2020, the average number of purchase orders to an MCUB was 8%, 2021, 13%, 2022, 16%, and then 2023, 19%. And so it's certainly a collaborative effort, but really rewarding to see that the effort and all the conversations and the training that we've been doing has really increased that percentage to MCUB vendors.
Councilmember Lilly.
Yeah, thanks, hey Jody, and I just love when you share that good news and great work to everyone. And you probably said this, and I might have just slipped by me, but when you gave the increase percentages of MCUB participation, is that by number of transactions or is that by dollar value?
Madam Chair, council members, so that is just an average over that year of procurements less than 25,000.
Okay.
And specifically categorize where it could apply when we're using local funds.
Okay, cool. Thank you. Thank you.
Great. And then just Jody, those last figures that you just gave, are they in a graph or in the report somewhere that I'm just missing them?
Keep going down.
Oh, is it
No,
down
not
for
the
the?
MCO ones, right?
Madam Chair,
Yes.
council members, if they're not, we can certainly include those in the talking points.
Yeah, I think that's just really good information for people to know and yeah, just wanted to make sure I was seeing it somewhere, not that I doubt you at all. I just thought, wow, I want to be able to remember that, so, yeah.
Yeah, it's exciting. And sticking with the theme that you've heard not only from procurement but with other business units throughout the year, that we're really looking at using our data to help drive conversations and ensure we have those intentional intersections to get to that shared outcome. Procurement is moving into our 4th full year of service level agreements with the business units. And we manage and measure a lot of transactional type data, like how many days from when a project's advertised to when a contract's executed by contract type, to not only help our customers understand and set expectations, but also to look at some of the projects where we've had success or some projects where we need to pull together teams to do more work. One of the new initiatives that we added and measured in 2023 was trainings. We added a series of trainings by quarter that we call Procurement University. And there were 7 different topic areas. And at the end of the year, we had 1,160 staff attending those trainings. So really excited to see the interest, really excited to see the continued participation. And in this next quarter, we are continuing to add different procurement offerings just to help understand and really facilitate those conversations again to help the business units.
And Jody, were those unique participations or were those total registrations on behalf of staff for the various workshops throughout the year?
Yeah, Madam Chair, committee members, I have them by topic area, but they're per training. So for example, Procurement 101, throughout the year we had 222 attendees.
Okay.
There could have been a repeat attendee.
And that was my only
Yeah.
question, if they were unique or if it was cumulative. Okay, that's great, either way.
That's great. And then looking at the total number of contracts executed by the business units, we continue to work with them to not only understand, but to be able to forecast so we can plan for them. And 2022 compared to 2023 did see a decrease in the number of contracts executed. We're just finding it, again, really interesting to understand what are some of the statistics. But then for purchase orders, we saw a pretty large increase.
And Jody, if I may, I'm following in your report. Is there a page number or a screen that you're referencing that I am not following along? It's my fault, I'm sure, but.
No, Madam
Okay.
Chair, council members,
Okay.
that's just on some of the service level
Got it.
agreements. It's
Okay,
And really, I just want to share with you some of the data.
thank you.
This is the report to you
Yes.
after the fact, but we're also looking at the data by business unit to help understand what are some of the transactional data, what are some of the success stories.
Got it. Okay, thank you.
And on the surface, procurement really is a transactional process. Again, you see the numbers, like how do we spend, how much and with who, but equally important is the connection and the benefit that it has to the business unit, but also to the community. And many of the projects, and one I'm going to talk about in particular, really represent and advance our Thrive 2040 outcomes of stewardship, prosperity, equity, livability, and sustainability. And one of the projects that I'm going to highlight or spotlight that my staff are so proud of is the Transit Service Intervention Project. This was a collaboration between Metro Transit's Equity and Inclusion, the Transit PD, and Metro Transit Operations. And this was, as you are aware, part of legislation, and it triggered a grant, funds being awarded, and a very quick turnaround time. And it allowed the council to directly address a public concern of rider safety and supporting individuals that utilize our system. And so with this project, the team initiated a new procurement method where they had a real expedited approach to submitting project interest. We had a lot of vendors who had never worked with the council before, and an expedited timeline. And then also some additional requirements for reporting. that was new that we hadn't seen before. And so as one of the outcomes, and again, we're all very proud of this, there were more than 700 contracts and 350 referrals that had been made over the last 3 months. This was a 2-phase project. The first was the mental health organizations and contracts, and the second phase had outreach and interactions for referrals. In some of those projects you can see, and it's like this does not have a page number, but on the 3rd page behind the procurement summary information.
All right, we might need to, I'm just not sure, can you show us what it looks like?
Sure. It is the page 3 pages behind the procurement summary, and the top line on that page is People Inc., but the 2 contracts that are specifically on this report are Brothers Empowered and The Link.
Scrolling.
And so not only is the data important and not only is the outcome important, but I really am proud of the intersections that our teams had and the engagement of a number of different units at the council to really bring forward a project that represents our Thrive outcomes.
Page 4 through page numbers. Just didn't go back far enough. Okay, I'm sorry, I'm with you now. Thank you.
Another really exciting initiative that was launched by our team in 2023 was creation of a contract management support unit. This mighty unit of 2 has really has been effective in creating tools to help supplement and support contract management council-wide. The unit helped bring forward a vendor suspension and debarment policy. It also assisted with vendor performance issues and facilitating meetings to help bring to the attention and really facilitate conversations when there's a gap between what we think is happening and what is actually happening with the vendor. We've created some standard performance and cure notices, and at the end of the year, this mighty unit of 2 created a 26-page contract management guidebook that is going to be included as a resource, again, to help supplement project managers performing contract management council-wide. This unit also brought forward a new software called Procurement IQ to help with market intelligence, to help us understand if we are getting good pricing, to help us forecast pricing, to help us create independent cost estimates, to conduct cost analysis. And it has a really robust category system where just this morning we were able to pull a report on chemical costs and then send that out to the project manager to help them analyze when the best time to buy chemicals are. And we have that same functionality for buses. And so it's been really exciting to reflect back on 2023 and some of the good work, in addition to seeing some of these specific contracts of the impact that they're making. And so at this point, I'll turn it over to Megan.
Oh, and before we do that, Councilmember Cedarburg has a question.
So I heard a theme that was kind of pulled in through there, expedited, focused. And so I know I haven't been on the other side of procurement here. You know, things are stretched out or whatever. And it seems to me that with the staffing, you got the right staff, you got focus, you can expedite. And it seems to me that that's really the way to move forward on a lot of these, is let people do their job, get the barriers out of the way, let them focus, set reasonable but pretty sharp goals and deadlines, and then get things done. It doesn't have to be perfect, you have to make progress and then move it along. And I really like that approach, and so it's nice to see. So I'm sure you'll apply that to a lot of other projects in 2024 as well.
Yeah, good
Thank you.
comments. And I would just add too, just the, getting the feedback after you've gone a round or two of certain things, just making sure, what could we have done better? What went very well, just always having kind of real-time iterations of improvement, continuous improvement along the way. I'm sure you're already doing that, but you guys are making great strides, so. Councilmember.
Yeah, on it. Thanks, Councilmember Seaberg, for bringing that up, and again, great work, and, for me, and we saw this in a number of, statutory directions, we got our own resources, right? Speed it up. We want this done by now, and it puts a strain on the system, I'm sure. And it allows us to learn, I think what Councilmember Cedar was talking about, we actually can speed these up. But I'm just wondering, in your experience, Jody, how much that statutory requirement either impacted our internal system's willingness to adapt and or gave us sort of the cover to, I don't want to say be sloppy, because I'm sure there was nothing sloppy about it, but to maybe do, as Councilmember Cedar was talking, to do things in a different way because we had to. So now we can go back and review, evaluate, and maybe correct systems. But I would love to hear your perspective on what this impact of the statutory direction was.
Madam Chair, Council Member, definitely we needed to pull together a team that could be quick, efficient, and also meet the legislative requirements. And so that project brought together a diverse group on our team, but also with Metro Transit and their many resources. And again, so proud of really the creative solutions. And the team in procurement actually pulled from a recent community development project where they had letters of interest that we learned some lessons from, but from those lessons we were able to lift it up and be able to help implement this very important project quickly with the right amount of checks. We did a 2-phase approval process, so we got that first batch through for the mental health. And again, we would do a few things differently, but it's really learning from those lessons and getting out of the way, but getting the right people involved and agreeing to what the path is, and also understanding some of those check-ins. And again, when my staff came with this story, I said, that's a perfect one to share. And it also helps them not only be proud and invested, but allows them to be really professionals in the profession and illustrate and showcase the value that they can add.
Cool, thank you. Thanks.
Thank you, Councilmember.
Thank you.
Barber.
Thank you, Madam Chair. Just to put a finer point on this, the legislature adjourned at the end of May. The TSIP program had to be stood up by June 1st. And so it's less than a week, I think, that we had to do that. Jody's group broke things into a couple of series of contracts so we could get people out. In January, I was out on the listening tour in the light rail system and meeting with these groups who are out on our transit system along the way. So not only did it go from nothing to, hey, they're out actually participating and helping on our system, but in a very, very short time. So very good, very well done.
Yeah, congrats.
Yeah, and really, Madam Chair, committee members, that's the kudos of the team. And the more that, we understand what the requirements are, but get out of the way, there's a lot more opportunity when we continue to build on these creative ways to get to that outcome.
Right. Anything else on that? All right, Megan, you're up.
Oh, I think it should be up there. At least he told me it would be up here.
There's nothing. Is there a PowerPoint
No.
ready to go?
Okay, I didn't have. Well, hopefully you have everything, Madam Chair, committee members. I'm Megan Solberg. I'm the Small Business Unit Manager, filling in for Ashanti, so I will do my best to fill in for him. Do you have the presentation? Okay, perfect. So the first page there, that's going to show you what our total MCUB commitments for construction and contracted services were for Q4. We did.
14.
Slide 14.
Slide 14.
Great, thank you very much. So for everybody watching at home on this link, it's 14 of 20. Okay, we're there.
So for Q4, we came in at 12.3 with our construction goal reminder of being 14%. So the next on page 15 there, that will show you a breakdown by each division. So as you can see, MCES came in at 10.4, Metro Transit at 10.8, RA came in at 27.4, which is amazing. And then MTS and CD to follow. And then we have our historical commitment data over the years. So as you can see, you know, we were trending up, there was a little bit of a dip, we still did meet that goal of 14%, but it did decrease a little from 2020.
And now you're on the page with the graph.
sorry.
Yeah.
Page 15, yes.
Yes, just making sure that we're following along.
Yes, I will let you know when I change over
Okay,
again for you.
Yep.
Again, this is our first full year where we've been reporting on commitments. So moving forward, we are really gonna be focusing on what trends we can see. For example, one thing we noticed for this last time, Q1 and Q4, we had the most awarded dollars in contracts occur. And we're wondering, you know, is this normal? Is that a trend that we're gonna be seeing moving forward? Another thing is the utilization of specific contracting and project delivery methods. For example, we saw a really high number of exemptions, sole source, cooperative purchasing agreements, things along those lines in Q4. Again, is that something that, for whatever reason, we'll see a trend through Q4? So that's gonna be something that we're gonna historically be looking for.
Can I just add, and so I'm gonna look at Councilmember Barber, is this really impacted by a lot of our major transportation or ES projects and just the, I don't know if there is a rhythm to these things or if they're just when things need to take place or not?
And I think right now I can't really answer that question because we're kind of trying to mirror those trends. I know one thing we talked about, you know, for Q4, maybe the increase in sole sources and things along those lines are, here's what's left of our budget, how can we spend that and get that out and serve some deliverables? But maybe Jody has a better.
Madam Chair,
Idea.
council members, I'd say as well, most of our, what we've seen historically for our commitments are through construction.
Yes.
And a lot of those construction projects, you're seeing the business items, you're seeing that reflected on either the Q1 or the Q2.
Yes.
Thank
Councilmember
you,
Barber?
And Madam Chair, and I would agree, yes, and I don't know that there's necessarily a seasonality to it, but it's sort of the timing where some of these things are. I think my guess is you're gonna find some of the sole source stuff kind of in the fourth quarter where maybe legacy software things and things like that have to be, that are legitimately sole source and it would cost us more to do something different. So that would be my hunch, but my uneducated opinion.
Well, that's kind of what I was thinking too, just based on the rhythm of the things we've been seeing come through the various committees and land here too. So it was a curious question, but I look forward to you guys tracking that more. Any insights on that would be great.
Absolutely, thank you. And then to touch on just a little bit, we do, looking at that, we're trended down from the 16.5 in 2022 to the 14 in 2023. One thing we wanted to point out is that in previous years, we did not include sole sources, exemptions, cooperative agreements, joint purchasing in our calculations. But we are doing so now because we are finding that there are opportunities for small businesses. And we can't count them when they get something if we're not also counting those types of contracting methods, you know, and when they're not getting that. So that's something new that we think did play a part in that downcline there. On page 16, so moving on to the next page there for you, this is going to be the total MCUB commitments and achievement. As you can see, again, the goal for the year, 14%. Metro Transit, RA, and CD were all above that 14% mark there. The next chart there is going to show you a breakdown by gender and ethnicity. And then the graph, so 51% to Caucasian-owned firms, 18% to Black-owned firms, 14.7% to both Latino and Asian Pacific, and then 0.07% to Indigenous. On page 17 here, this is gonna be,
Okay, and so are you referring to the just the chart, MCUB firms and ethnicity, women, men?
correct.
And then you put percentages on those, that's.
Yes,
some-
Ashanti wrote them in because he thought you may like to know that
Yeah.
information.
Yeah, in fact, if you wanna do that in the future, that'd be great, thank you.
Madam Chair, committee members, I will make sure that that gets taken care
Yeah,
of.
thanks, those are, you know, as policymakers, it's good for us to have a good grounding of it, but then also to just know, you know, where we're starting to fall and what those trends are. It helps us, I think, to just year over year, first of all, tell the story on behalf of the great work you're all doing, but just, it helps us. I am a I am not only an auditory learner, but I have to see things to kind of keep them in mind, so. But that's great, thank you for that.
All right, I think I'm on page 17 now, if I'm correctly counting here. So then this is gonna move us into the payments for MCUB firms. So in Q4, we had a total of just about 5.5 million, which was down from Q4 of 2022 by 16%. The next thing here, we're gonna be talking about P cards. Our goal is 10%. We did come in at 7.63, so short of that 10% goal, but 7.63 is our highest achievement relative to P card expenditures with MCUB to date. So we're happy about that and that it continues to trend up. And then below that, you can see the breakdown by division. On page 18, then it will break it down further into that demographic data for you, as well as give you the number of unique firms per demographic. And then on the last page, just some things to highlight, kind of touching on some of that direct spend. I know Jody mentioned it briefly. In Q4 of 2022, our direct spend was 18. In 2023, we saw it come up to 21%. And then some successful MCUBs here. We had exemption spend. We had IT Audit Labs was awarded 2 contracts. For MCUB Select, we had MA Associates awarded. We had an MCUB preference success of Lovedale Electronics for almost $170,000. And then MCUB state contracting with Paragon Paving for nearly $50,000. And then the 2 bottom ones are things we're really proud of. This was in partnership with Tara Rash and John Fuent from Procurement. But we worked, and I'm sure you've heard in previous meetings, we were able to develop some partnerships with some of our large suppliers and pair them with MCUB firms. So with New Flyer in Q4 2022, the spend with B&L, who is the MCUB, was $115,000. In Q4 2023, it was $315,000. And then MA Associates is the partner for Gillick. And in 2022, their gross receipts with us, or their receipts were $312,000. And Q4 in 2023, they were $670,000. So we're really seeing some success in doing those partnerships, and we're happy about that. And we actually just had a meeting this week with Siemens to kind of engage their interest in that. They were very receptive. So over the next month or 2, we plan to work with them, help liaise, and give them some MCUB firms that would meet what they're looking for, and then they will kind of go through their vetting process. So if we can get that one concluded, we'll be very excited about that.
Councilman, I'm sorry, I didn't mean to cut you off. I just know that we're at the end of that. But did you have any closing things that you wanted to mention to us about?
One other thing I know that Ashanti did give me to tell you, I think that we're excited about, we do have a bonding and education event coming up in March. MnDOT's leading the event. We're partnering with them as well as our other regional partners, the Airport Commission and the City of Minneapolis. So it's going to be for certified small businesses seeking to obtain bonding and also to look to increase their bonding capacity. Historically, we know that bonding and being able to get bonding for small businesses is a huge barrier. So we're really excited about this. It's going to help mitigate some of those issues. And then it's also in partnership with the SBA and at the federal level. So we're very excited about that and looking forward to that.
Do we have Hennepin County, Ramsey County, other large entities also participating in other ways? I know you didn't read their names off, but are they partnering with us in ways?
Madam Chair, committee members, that I do not know the answer to. Who he gave me is who we are our partners for the certification program.
Okay.
So I'm thinking it's just that, but I will double check and have that answer get back to you.
Yeah, sure. Maybe they're doing their own thing too, who knows? So I don't know. Right. Great. So Councilmember Barber had a question.
Kind of mixed question comment, but great to see the numbers with New Flyer and Gillick. I'm really excited we're doing it with Siemens. So are they rolling out the practices and things that they're learning with other transit agencies? Because I don't see other transit agencies necessarily working with the suppliers this way, because it's almost training them how to do things differently. That helps all of us, right? That helps all of us from a contracting perspective.
Madam Chair, committee members, I know for New Flyer that they, as well as Gillick, have some of these partnerships in other states with other firms. So again, if I'm not mistaken, New Flyer actually approached us about kind of doing this, and then we went and looked at, okay, who else are we purchasing from? Let's talk to Gillick, let's see if we can do that. Then we're coming down with Siemens. So it's definitely something that I think I know for sure New Flyer out in California, things along those lines that they have been doing, but we're on the forefront of it here in Minnesota, I believe.
And I would just say it's very important because, well, Jody and I have talked about this before, it's some of these big contracts that end up skewing our numbers all over the place. And, you know, to take it and break it into chunks where you can see some of it with some of these major suppliers is gonna be very, very helpful, probably more accurate, than what we actually are seeing, but it's very helpful, I think.
Great, Jody.
Yeah, and Madam Chair, Councilmember Barbara, I think that's a good point as well. Tara Rash, who's the purchasing manager, has been really diligent about looking at some of these commodities where we historically have not had participation and having those conversations with them and definitely bringing in our partners. But we should also look at our responsibility and opportunity to show others through ACTA. And then one more data point that I didn't mention was on this report, you see in the actual details of each contract on the right, the two columns. One's the actual DBE or MCUB goal set, and then the final commitment. And while it may seem only insignificant, if you will, if it's a percentage point or over, our staff and probably the Office of Equity and Equal Opportunity have been tracking it. And for fourth quarter alone, the commitment over the goal was more than 1.7 million. And for the year to date, the commitment over the goal was more than 6.8 million. And so I think that's really significant. And that demonstrates we've got some really good partnerships and some shared success that we can all feel good about and then just continue to build on.
And Jody, can you just remind me how the goals are set?
Madam Chair, committee members, the goals, when my office receives those, we assign them to a specialist who works with project managers, various construction staff if needed. And what we do is we really go through and look at what are those scopes of work. We then do a relative availability analysis where we're looking at how many firms in general in Minnesota are certified with those NAICS codes that scope falls into. And then we do a comparison and get the relative availability based on the DBE numbers. That's gonna give us our base goal. And then we make adjustments, can be up or down based on our knowledge of the DBEs, our knowledge of the scopes. For example, a traffic control scope is something that we frequently see subbed out to a small business and at the full value. So that would likely be a scope we would increase up. And we're always gonna leave it open to where there's multiple avenues to meet a goal, but then also with our overall goals in mind, you know, really try to be pushing for that participation. So then when Jody was talking about, so when we get those back in, whatever above that commitment is really what we call in the federal regulations gender neutral or race gender neutral participation, but that's really where those contractors don't have to use them, but they are, because, you know, they're just a contractor they've worked with, they were able to sub out more than the goal or whatever various reasons.
Okay, great. Anything else on this? Well, thank you both for being here and sharing this really important and good information with us and helping us to continue to understand all the layers and the methods that you're, you know, working with all the different business units. And I know this is, you know, incredibly important, but also the time and the attention and the expertise you bring to it, it wouldn't be possible without that. So thank you to everybody who's involved, and thanks to both of you for being here today. We really appreciate it. All right, so now we will get ready to go into closed session, which is on our agenda today. First of all, I will go to, I believe, Councilmember Cedarberg, who may have a motion to move us into closed session.
Madam Chair, I move to close this meeting under section 13D.03, subdivision 1 of the Minnesota statutes, so we can consider a labor development and negotiation related to labor strategies.
Thank you. Is there a second?
Second.
Seconded by Lilligren. For everybody, before we close the meeting, the governing body of a public employer by majority vote in a public meeting may decide to hold a closed meeting under the provisions of section 13D.03 subdivision 1B of Minnesota statutes. The discussion at the meeting closed under this law must be confined to labor negotiation strategies, developments, and or discussion and review of labor proposals. The proceedings of a closed meetings under this law will be tape recorded, preserved for 2 years, and made available to the public as provided by law. With that, let's go into, did we lose anybody? No, we've got everybody. A roll call vote on the motion to close the meeting. Do you want to spell it?
Oh, I'm sorry.
Oh, I can do a motion. Yep.
It's the motion.
Oh, just a motion, sorry. Just a regular motion then to.
Sorry.
No, it's great. We're gonna get there no matter what. So all those in favor of closing the meeting say aye.
Aye.
And those opposed, no. And that passes unanimously. And just for everybody too, before we do close the meeting to discuss these labor strategies, I'd like to inform members of the public who are monitoring this meeting, and for the record, that the committee will adjourn immediately after the discussion of this information item, and that the committee will not have any discussions or conduct any business after this information item is complete. And so for the record, please note that this meeting was closed at 3:27 PM on February 4th. And with that, we'd like to make sure that we have got the recording.
Sorry, I missed 2 seconds.